Good afternoon, everyone. Good to see you all this afternoon. Welcome to the PivotBoss Monthly Market Outlook for December 2020. Today is Tuesday, December 1st, 2020, and I want to say thank you all very much for being a part of today's webinar. I do have one thing I do want to show you before we get started here, because we do have a pretty full slate here. We're going to talk futures, look at various futures charts, and also talk some key stocks, and also look at some candidates, and also do some live prospecting as we go. If you have any recommendations, feel free to chat them through or even put them through in the Q&A as well. So however you want to get them out. And if you're following along in the premium trading room, you can also post in that room as well, and I'll do my best to follow along and where you're chatting. All right, so number one, wanted to show the 5-day live bootcamp that's coming up here for premium members. That is next week, Bootcamp 2020. If you want to go to pivotboss.com/bootcamp 2020, it'll send you right to this link right here. This shows the schedule that will be following over the next week. It's basically, now that we have a new trading room here, the EchoFin 2.0 trading room, we now have much more content, much more filled out space. We've been using this room since August, and now it's time to kind of go through and do another Getting Started with Premium series here. This live bootcamp will be next week. It'll be held 11 a.m. Central each of the 5 days, Monday through Friday. And the first one will be basically discussing how to get started with premium, showing all of the resources that we have available, getting everything installed into your machine for various platforms. And number two here, day two, this is getting started with PB indicators. So we're going to talk about the various PivotBoss indicators that we use that will be available to you as well. Also getting started with our PivotBoss signals will be Wednesday. Getting started with PivotBoss scans, including new scans as well, that we'll be using in our room, and also getting started with our PP setups. So a full slate next week for our premium members. If you're not a premium member, then it's a great time to join. This is $49.50. You're going to get 50% off the first month. 50% off the first month. So just $49.50 for the month of December, and that includes the 5-day live boot camp there. You'll see down here that it also includes our 24-hour chat room, our live trading room, push notification trade alerts, live screen share with audio, all of our proprietary indicators and tools, well, the ones that are available to premium, and then includes also our on-demand training, which is very, very powerful training that we've done before. It is on demand. It is our 5-part signature setup series, and it's also our 10-part executive training series. Great training series that are ready and on demand right now. So again, it's going to be great. Again, with the upcoming bootcamp, we're going to focus on all of the resources and tools that you have at your disposal here at the premium trading room, and then how to use those like we do in the room. And then you also get an access to the room for the entire month. So again, this is going to be next week, starting Monday at 11 a.m. Central. Looking forward to seeing you all there. All right, let's go ahead and get started here with the ES. This has been quite the time here for the ES. A very strong move that we've seen so far off of the November lows. The last time we discussed, we were already seeing the rejection here off the lows. We talked about how important the bottom of this range was, because it could slingshot us back up and higher into the top of the range. We've seen that move materialize. One thing we also saw in the month of November is the announcement of a vaccine for COVID-19. So this was the first primary announcement. We got a big shot to the upside, and then after that top, we rotated back down for a big rejection of those highs. We have just barely come back to those highs today. So that was early in November, the first or second week of November there, and we've just come back to take out that high today. So that's a big time level up there. Again, the key range high is also right here. That's 35.87. That's another important level. You can see yesterday's low is just above that zone. So really we have a whole ton of very important zones up here. But one thing that continues to be in effect is the overall trend. It remains up. And while we might be at a cycle high right now, this could still easily continue higher because we haven't really violated any lower market structure. Every time this thing continues to grind higher and push to new highs. So right now, the most important key level here to watch is going to be 35.87. That's the key range high. This market pushed through it, came back with a higher low and is above it. If it starts to give out that level, it may open up some downside into 35.11, which is the FOMC key level from November. And below 3,500 opens up 3,200, 3,250. So again, bulls want to keep 3,500 bid. Any pullback, even as deep as 3,500, could still be a buying opportunity for a year-end rally. You can see here higher value relationship with the pivot range. That's the monthly pivot range from month over month. All of that right there is that usually points to more strength ahead. You know, you have a higher value relationship here. Even if you pull back into the pivot range, it's a nice continuation in many cases. Oh yeah, quick question here. Will the bootcamp videos be saved for later viewing? Absolutely. So those bootcamp videos, like today's recording, will be recorded and published same day, and I will add those to our premium library of on-demand training as well. So not only are the current on-demand training videos already available, but the ones we record next week will also be available same day. Great question. Okay, so one thing I did mention this morning, because we do have new monthly pivots for the month of December, the last pivots of the year. One thing I mentioned was that ES, NQ, and many of the others, they all closed at the highs of the month. There was a high here and the close is here. The midpoint's way down here and the previous low way down here. That was the low, first trading day of November. So huge high range month, very bullish, and it closed on highs. In many cases, when you have that relationship, there is a tendency to see those prices go offered early in the month, some profit taking above those highs. If that were to be the case, if that were to play out tomorrow, what we'd be looking for is some sort of rejection of the previous session's high. So maybe price gets above the high, maybe it hits 3,700, and then it fails to hold above that previous high and fails back below. That could open up quite a bit of selling pressure. That opens up a bearish outside day tomorrow. That could open up additional 1 to 3 days down, and that's how we get our pullback. However, given the overall directional bias of this market, right now any weakness is still an opportunity to buy, whether it's a short-term reversal like the one we saw recently, which led to strength, or whether it's a more medium-term type of reversal here where you see multiple weeks. Either way, right now any pullback is still an opportunity to buy into the end of the year, unless 3,500 is taken out. If 3,500 is taken out, it opens up another 200 points of downside, and then we'd be coming down to the lower end of this range, where we then might see a buying opportunity. So those are the thoughts right now with regards to the ES. But if you look at the NQ, very similar price action as well. This one is trading right in the vicinity of the key range high, right in the vicinity of the vaccine news high, and we are trading at the previous high and close of the last month. Again, this offers an opportunity to see rejection and see some sort of pullback. Even if it's just a 1 or 2 day pullback like this one, it could still be a buying opportunity. Higher value relationship, the PMers are trending higher. Even if it pulls back, we might be headed higher. I mentioned in our trading room today, the level to watch here would be 12K. Any pullback into 12K might be about as low as it goes, before we finish strong heading into the end of the year. Now, if we were to see some sort of significant rejection up here, say price does rally first, but by the end of it has seen rejection. Maybe this thing explodes higher into 12.8, and then by the end of this thing we're back below 12.4. Some sort of significant reaction of that nature could cause a bigger pullback, say to 11.6 or perhaps into 11K. But right now, this market is hot. Even if we have had strong rejections recently, these pullbacks are getting more and more shallow. So again, this market remains bullish, and if it can find a way to find acceptance through 12.6, it opens up the next targets above. We talked about this key range in the last monthly outlook. We basically made it the key range monthly outlook because a lot of tech had it. We looked at Tesla and Apple and Amazon and so many others, Netflix, they all have this key range. And we mentioned that a bit more development and then we could see that thing rally. And if the market can finally get a breakout through these highs, we have 13,369 and 14,270 as the next upside targets. So 13,370 and 14,270. Big upside targets that could be reached. So right now, again, because we are at this extreme, I'm looking for a short-term reversal followed by a shot at breaking through these highs and finishing somewhere in the 13,370s by the end of the month. So that's the early idea, unless something significant happens. Now, one thing to keep in mind is tomorrow we do have Fed Chair Powell speaking before the Senate Joint Economic Committee. That is day 2. Depending on how the market digests his testimony there, again, that could lead to some moves ahead, some volatility. So some levels to keep in mind here, but again, very important pivot here in the charts. If there's any failed new high early, it could lead to a bearish outside day tomorrow, however briefly it may be. Now, one market that I really wanted to show here is EMD. EMD is the S&P Midcap 400, and I wanted to show it in the weekly time frame. We've been seeing lots of these patterns developing here in many of these markets. This is another one of them here where we have this expanding range that's developing here like this. We've just made a big move through 2100, which was the top of this recent expanding range, and we're now sitting up here. One thing that can be a typical indication of a failure to hold these highs and then we see another rotation down is when the market pushes beyond that high, but it fails to really extend that high. Instead, it builds some sort of range or box, right? It does this. We'll know that this thing is building for a failure if it starts doing that. Very similar to when price did that here, and then we rotated down, and price did it here, and then we rotated down, because it's an inability to really push forward and extend this thing into a continuation. Instead, you get everybody long at these highs, the stops come out, and then it cascades. Get everybody long at these highs, one rotation up, two rotations up, and then you break through the lows, stop run occurs. So 2100 is the level. 2100 is the level on a long-term basis here for this one. If we fail to really continue this thing and we just kind of start going sideways here, we really have to think about how much of a pullback we'll see if 2100 gives up. And I think just on a very measured basis, 1800 might be a great level to watch. 1800 is the other side of the D-shaped profile, with 1891 being value. So if we're looking at it from this perspective here, that's value. We're above value here, and this is below value. So if we were to see a failure of 2100 sometime down the road, that could lead to a rotation to 1900, 1920, and then perhaps down into 1800, where then you may see a bounce back up. So just some thoughts from a longer term perspective. We're at the top end. This is where everybody's happy. Look how far beyond we are, but we've been there before. We've been there before some bigger dramatic wave happens. Not saying we go all the way back to 1100 or 1000, but anything can happen, and it doesn't need to take long. So those are some key markets there. Now another one here, switching over to energy. This is a great chart from a longer term perspective. This is the weekly time frame of crude oil. There's a few levels up here, and just one too many FOMC key levels up above. But the levels here that really are important is that $40 level right here. That's been a very important level. You have value at around 48 on the longer term basis, and then you have this upper end that's 65. Right now, we've seen this market mostly become range bound between 44 and 35. And it appears as though crude oil is starting to make a move out of this market structure down here and into what could be the next market structure above. From a very short-term basis, that means 55 could be the upper end of the target right there. So from 45 to 55, that's the short-term move, followed by what could be an ultimate continuation to the upper end of the range, right? And that would take you into 65. So right now, this market has finally made a move this week. Doesn't mean it's ready to go right away, but it appears as though this thing is starting its move higher. We may see a pullback as deep as, say, 41 or 40, and that could still be a buy-in for what could be a push to 55s. 55 may lead to a retest of VPOC, followed by a continuation towards 65. So right now, 65 could be the long-term target for crude oil. We've had, in the very short term, the idea that above 44 being right here, above 44 really opens this thing up to the next LVN above, which is 55. So in the very near term, again, right now, we're seeing this move develop. I think any pullback into the higher value relationship next month, this month, any pullback into 42, even as low as 41, somewhere in there, man, if we can get a rejection there, some great looking rejection like this, right? Or perhaps pull back and form a really tight range that can explode. Something of that magnitude on this pullback. I think anything below 42 might offer an opportunity to slingshot this higher into 5-year VPOC, which is 5280, with a shot at seeing the 55 CLVN. That's just the short term. So right now, this could be a very bullish month here for crude oil if prices can continue to hold above 42. That could lead to a really great continuation to the upside. So something to consider there. Now, if we fail to hold 44 for any extended period of time and we can't get back above that level, now we might see some sort of bigger swing on our hands. But for right now, the initial pullback could be great for a continuation on a longer term basis. I did want to talk gold now. Gold here has had a very bullish day today, up 1.4%, or rather 140% of ADR, 2.15% on the day. Something we talked about with gold was that eventually the buyers that came in to defend, their stops were going to come out. And 1860 was the level we kept talking, and eventually 1860 gave out, and it opened up a huge flush back to the 1770s. This 200-day moving average continues to ascend at a very bullish pace, and you can see right here this pullback to below the 200-day average here was quickly bought for a sharp reversal back up. We're seeing similar behavior now where price quickly shot back above the 200-day, back above the 1800 level. And what I mentioned in the pre-market report yesterday was off the 1770s here, we were showing signs of strength, and I mentioned if it can find a low here at 1770s, it opens up a 100 handle move back to 1870s. That could take you right to the previous month's midpoint and take you to the key range low. So that plus 100 right now is already well in effect here, as this thing has rallied 40 handles off that low, 50 handles off that midpoint of that rejection day. It's already been a strong day. Today was a 42-point range. So a huge continuation day today. I would say any pullback to 1800 could provide a short-term move higher to 1850. That's the play over the next 1 to 3 days. You know, if it pulls back to 1800, look to defend for a push into 1850. That's a plus 50 right there. The other support above that, or level above that, which was support, was 1875. That would be the last little leg, but the easy 40 to 50 points happens off 1800 tomorrow. So can this thing hold 1800 on the pullback? Not an easy feat, because we are fighting a downward trending PIMA trigger zone. We are lower value relationship right now on the pivot range for the month. So we could easily reject these highs and see a lower low up ahead if this is going to remain bearish. So right now 1800 has to hold. We can get below it a little bit, but it needs to finish above it. So if it can't close above 1800 tomorrow, that's going to be a problem, and we may be looking at new lows. So keep that in mind for gold. Now, gold had a very bearish month of November, and it's starting to bounce here on the first trading day of December. You can also see here DXY. I mentioned last month that this one looked like a candidate that could be headed higher into the end of the year, and that did not pan out that way. As a matter of fact, this one basically saw a rejection day right after we talked about it being a rounded bottom here, and it led to a retest here of the 92 level. I mentioned before that 92 has to hold, because if not, it's headed to 8850. 8850 is kind of the last line of defense down here. Here's the 92 level, and there is the 8850 level. And you can see right here, 92, right there, giving out at that level and dropping right now hard. That is very, very weak. And any bounce into that zone could still be a selling opportunity right now. What we really need to see for bulls, dollar bulls here, would be for price to bounce back above that prior pivot low with a strong rejection. You know, we get a strong rejection here that pushes this thing back above that low. That could give us a lower low failure and a shot to retest highs between 94 and 95. But unless that happens, this is a huge violation at 92 with a shot to retrade as low as 88.5 here, which is the bottom of the next price distribution. So that's huge. This is a huge move. As you recall, we started the year with a major reaction here, absorption here, major move. This break at 95 got us trading here, and now here we are again. This has been seen before. As a matter of fact, the last time we dropped to 88.5, we saw a similar day like that right there. It's the same type of day. It's the one that gives up that 92 and tells you you're headed much, much lower. So this is not good for the dollar. We're basically seeing that day right there. It gave up 92s and it is gone, and it is going to go until it finds the next area of rejection. Last time that took about 3 weeks to reach those lows. So we have a blueprint for it already. Look at that day right there. Again, unless the dollar can reclaim 92 soon, this day suggests that we are headed down to 88.5 over the course of the next month. So again, just a very, very bad failure over here after the rounded bottom. Got a failed high, sell signal, and just crushed to the downside. So this one not doing well at all. And while gold and the dollar were dropping in November, one currency here was moving big time, Bitcoin. Bitcoin had a huge breakout right here, and that led to a massive move into 20K for a second time ever. That was due to PayPal saying they're going to now start accepting Bitcoin on their platform. You can see how tremendous that breakout was right there. That was it. It was all this built up energy to really explode right there. It was a small saucer here, a rounded bottom that led to that explosion. A bigger rounded bottom has gotten us here, but measuring this thing out suggests much more than even that. It means likely 30,000 ahead for this one. And the way I'm measuring that out, again, you have this huge rounded bottom that is accumulated for over a year. Basically, you know, what is that? July, all the way until it broke out here in October. So from July to September, 15 months there of building out. The pivot low there was about 4 grand. This one is 14. That's about 10,000 right there. From the breakout point alone, that puts you at 24,000 on a measured basis from pivot, strong pivot top to strong pivot bottom. That puts you at 24K. I mentioned to our group a couple of weeks back that even with this move here, Bitcoin could still be doubled, because after you get a strong move like that, there is a tendency at times for a strong flush to occur. And if we get down into the 12K zone, it could finish into 24 and then continue much higher. But for the most part, this could be headed even higher still, because we have this target over here. Let's do this. There it is. And then let me change. Oh, there it is. Okay. This target right here is the 100% target of this key range right here. That key range is important because it was the first IPO impulse range that when the futures were created for this product. We saw that run all the way down and eventually got the 100% bottom target accumulation, and now we're working our way eventually to come up here and snag the 100% target. So 29 could still be ahead for this one. Now if you look at this on a weekly chart perspective, it'll make it a little bit easier to understand here. Here's it from a weekly perspective. There is the key range high. It sold off to the key range low. Here's the midpoint. There's the 100% target. Look at it right there. Boom. It came back to it in April and exploded, and we are almost at the key range high. Look at this explosive move that occurred here. Again, any pullback, even as deep as 14, right, could still be a good buy longer term. 14 could double all the way up to the 100% target down the road, which would be that 29, right? So you don't even have to get all the way to the 29. That target is likely going to be reached likely next year sometime. So all you need is one move to 14, and 14 doubles you to 29 or 28 really. So that's where this thing's at right now, is that this thing has exploded to the upside. Again, theoretically speaking, it can come down as deep as 12 and still go, but it looks really solid. Whenever you get back, one last thing, whenever you get back inside the key range, here's the key range from here to there. When you make your move back into that key range, because for the most part it traded in the lower half of that key range. Now that it's inside here, it may develop in here for a while. So there's a tendency to come back to the key range low and hold and trade in here. That's why I mentioned we could see a move as deep as 12K. But for the most part, longer term right now, 12K holds. You see a continuation much, much higher heading out. So I wanted to talk about that a bit here. This one has been super, super strong. And to piggyback on that idea, something we've talked about in our room was Ethereum as well, ETHE here. A member brought this to our attention on this day right here and asked about it. And it was a perfect timing for this one. So for those of you that follow this one here, this one could be headed to the 150 to 155 zone. We have this range basically that's built out right there. This was the rounded bottom right here. And then it broke to the upside big time. So on that day, I mentioned that this is right at the spot where you want it to be, because 70 can double you to 140. You get a double off that level right there. But this has upside as high as 155s, so 150 to 155. And then not 2 days later, this thing explodes to the upside and continues higher, pull back and jumps again. So this one is really, really strong. The one thing we saw was a higher value relationship. So it was lower, 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 higher and narrow, huge month. Now we have wider and higher, which means we could go sideways a little bit with an upward bias. So any pullback, even as deep as 70, 8 could be a good buying opportunity to the upside. If you can get 70, if you can get 80, there's a 160 potential here to double just from 80. So again, this one looks really, really solid. The upside is into 155s, and any pullback here could be a great buying opportunity. Look at that teeny little CLVN right there. That's right at around 80. So again, any pullback into 80 could be a good continuation into that 160. So that's Ethereum, which follows Bitcoin. Okay, so I wanted to talk about some stocks here now. We have some key stocks that I'm going to review, and if you have any that you'd like me to take a look at as well, I'll certainly do that. So please let me know either through the Q&A or through the chat any stocks that you'd like me to take a look at, and I'll be certain to do that. Number one here, we had some candidates from last month that were our swing buys and swing sells. One of the swing buys here was Twitter. Twitter was great because we had developed this impulse sell-off from that high to this low. And when we discussed this one, I mentioned that we likely see a swing move into this target. This target being 45.93 or the 46 level evens. We just got there last week. So it took the entire month, but look at that move here. Again, the extreme reversal idea where you have an extreme sell-off, and it's the rubber band idea. You let go of this side of the rubber band. After stretching it, it snaps back in the opposite direction. The other idea, again, is that impulse move, right? A strong impulse sell-off, strong impulse low, and bounce, and that should give you that midpoint. So we got that. That was our buy candidate from last month, which turned out fantastic. BSX was another one. Now this one was incredible. Did not expect this one at all, but the way it happened. But we were expecting a bounce. You see that right here. This was a great 33 LVN right there. Great ledge. Solid reactions prior. And this was the buy signal that we were talking about right there. I love this kind of buy signal I mentioned. It's already gotten a bounce off of a key support level, and now we've gotten a failed new low. It took out 2-day lows, shook out those players, and then bounced back up to form a buy signal. That is usually indicative of a quick snapback. And we were looking for a move back toward 39.40, and this thing nailed it. It nailed it. But it did so on a huge gap up after 2 days of absorption. Big gap up. So that was a major, major push, but that was a quick short-term buy candidate as well. Another one we talked about was Plug. We like Plug as a buy candidate. Last month, again, it was this day where we did it, and I mentioned that failed new lows in an uptrending market are some of my faves. But this one far surpassed how deep we thought it could go. I mentioned before that this one had been channeling nicely higher in this channel here, so we were looking for a move somewhere around 22, right? And this thing shoots up to 28. So that's how strong this thing has been. But again, those were a few of the long candidates we had last week. Actually, the 3 long candidates we had. Great failed new low in 2 of those, and just a strong move. So great job out of those. One of the sells, we had 2 sell candidates. This one was the one we really liked. This is something we talked about in our trading room that day, and then I also discussed this in the monthly outlook, is that when you look at a stock like this one, Biogen, and you get those massive spikes on news, right? There's always going to be some news where this drug was approved or that drug was approved or whatever the case is. I pointed to each of the times that happened and how it has severely pulled back each and every time. I mean severely. And again, much like Plug, where it exploded higher, or BSX that exploded higher, this one took a huge gap down in quick fashion. We got one down day the very next day. That's a bearish extreme reversal signal, one of my proprietary signals, and the very next day already gapped back down to 230. So again, that's just tremendous how this happens. So anytime you see one of these, if you happen to be long, take the profits. If you happen to see it happen, then look to fade it, because that tends to be a high probability to fade that happens time and time again. So those few candidates worked out tremendously here, and we also looked at others. Let's take a look at Apple here. Apple is one that continues to develop. This one is likely due for a major phase of expansion soon. We discussed this one as part of this key range back here, how it developed this awesome key range. It's trading right in the middle 50% of the key range, and soon it will have enough energy to fuel a significant breakout and continuation. And when it does, we have very reliable upside targets that we can play to. Number 1 is the 162 level, and number 2 is the 186 level. So 162 and 186 are the next upside targets. Today's close, 122.72. When do you get in? It all depends. I mean, it may already begin today, and we might see this thing kind of creep higher heading into the end of the year. We may see this continue sideways for a while longer until we get that breakout day. It's hard to tell with some of these unless you get some signal, some rejection, some reaction. If tomorrow, for example, was a day that it dropped hard, but by the end of the day it closed back above this low, that would give you a buy signal here. That would tell you that we're ready to rock and roll. So we're looking for something to tell us there. But right now, this looks good. And when you have 1, 2, 3 months of energy built, it can fuel 1, 2, 3 months of strength. So we could be looking into a move into March if this thing gets a breakout. So this one is still building out. It looks fantastic. I would say if this market fails and we see some sort of major reversal, then somewhere between 95 and 100 could be the next major bounce point for this one back up. You do have your key range low down here, but the 200 with that LVN are the levels to watch first. So something to keep in mind with Apple, but great key range, awesome upside targets, eventually 186. So if we were to see some sort of flush that takes us below 100, you know, you're very close, say 90 or shoot 82.5. That gets you a double down the road into the upside target. So that could be great. Okay, let's take a look now at Tesla. Tesla was one we looked at last month, and we gave the exact same analysis as we just did with Apple, and we're already seeing the breakout move. It just began a couple of weeks ago here. We got the big gap up and run, a major breakout through the 475 level. Price stalled at 500 for a couple of days, built up energy, and exploded again, and is already at the 50% extension. So when we talked about this one at the beginning of November, I think it was right here at the time, something like that. It was right here, 425. I mentioned we could see a little bit more sideways, but whenever it gets going, the upside targets are going to be 588 and 675, and we could get there by the end of the year, and it's already surpassed that tremendously because it could be there by the end of next week if it really wanted to. This thing is very strong. It's being added to the S&P 500, which will only boost likely the buying of it. You can see after this accumulation and rally, the PIMA trigger zone has come up big time to provide support. 8-period average is skyrocketing. These are all very bullish. So any pullback likely is a buying opportunity for a continuation into that 675 for Tesla. Here's another one. We talked Netflix last time. Netflix continues to be stalled here. It just really hasn't done a whole lot. It continues to build energy within this key range, but it's been stuck around the 503.77s, which is the midpoint of the key range. Very clear support here off the lower 25% level, but this one for some reason almost looks distributive. It almost looks like a distribution up here where bulls are basically handing off the position, and soon a violation of 460 opens up a major run, stop run down, and major run on this stock. So you'd like to see this one hold 460, especially 450 to 460, because if somehow this were to come down below the 200 and we see a major reaction, that might ultimately get this thing going, you know, something like this. But right now, not looking good at the moment, and definitely don't want to see it fail to hold 460 for too long if you're bullish. Here's Amazon. Amazon has a very similar range here to some of these others where it had a key range here that developed here. You could likely mark this one too if you wanted to. But it's been mostly range bound and coiling. Again, you never really want to bet against Amazon. It just continues to explode like its own index. And right now, it has been mostly chopping around the 3,200 level. And very soon, it may make a move out of that range to one of the, out of the center to one of the edges. So we have this D-shaped profile where right here, the range that we're inside right now is this range right here. So you have 2,900 to 3,500. That's your middle. If we see some sort of drop into 29, maybe even 28, that could provide a great return back up and higher. Not sure we'll get that, but we've gotten some pullbacks. We've gotten some deep pullbacks before here recently. This one's harder to call because the pivot range is here at the center, the close is at the center, and you're right in the between last month's extremes. But I would say if there is some weakness that comes out of this, we could be in a great position here to see some sort of reaction back up. If we come up here to these upper areas first, again, it could be an opportunity to fade this back down. So right now, this one right at the center of a D-shaped profile and really needs to move to an edge so that it can be faded. Here is Lulu. Lulu is another one we had as a key range here that was developing. It's starting to make its move. It's starting to make its move higher. It has broken to the upside. It does have a higher value relationship for the next month, so even if we were to pull back this month, it could still provide a bit of strength heading into the end of the year. The way that this strong low developed here and then we kind of just held at higher lows, that looks really solid for this one to continue higher. So again, we talked about that range developing, and if we can get a breakout at some point, we have some big upside targets ahead. And again, 450 and 500 could be the next major targets if this thing can get going. Again, needs to kind of hold above 360, 355 for this to continue to show strength in the near term. Square continues to show strength overall. We talked about this one last month as being still within the channeling price structure. Last month we were, was it here or here? One of these days was where we were at to begin the monthly outlook. And again, what we talked about was, typically speaking, you're going to see a rotation back higher. So we could be looking at a move back toward 200. Again, this thing reached it so fast. It reached it just in a matter of days, 200 that is. Then it came with a deep pullback and then followed through to the upside. But now that we're at the upper end of the range, remember we have the previous high, previous close very close to each other. That could provide a bit of a rejection opportunity to come back down and reset at the lower edge of the range. Again, anything into the 180s could be an opportunity to fade it back up. So right now I'd be a little cautious of this one, as we are at a cycle high. A failure to hold 200 could rotate this down by 10% for a bounce back up. Square looking good again, but at the opposite end of the channel this time. Zoom though, Zoom took a hit, and this comes on earnings here. The actual earnings huge, 99 versus an estimate of 56, 57, but just a major drop on earnings there. I mentioned in our room, when you tend to see this type of all-out failure here in this gap down on earnings, it tends to be a very bearish signal, at least in the near term. So this thing rallied into earnings, rallied to close on highs, and then took a massive gap down outside of 3-day range in value and then pushed strongly lower to open. That is very, very bearish, and the tendency that follows is for this to remain weak for at least the next 1 to 2 or 3 weeks. The midpoint's going to be very important here. So we have a very clear midpoint, 418s. If this thing were to reclaim 418s, then perhaps this could be a higher low that leads us to a gap fill. But right now, the way this behaved, very, very bearish. I would say any pullback to 418 or 420 could be an early sell opportunity for a push downward. And in this zone might be the opportunity to watch for a bounce back up. So right now, very bearish the way this thing gapped. If it stays below 420, could be more downside ahead into as low as 320 perhaps. A move into the rising 200 might provide a very good catch point for this one as well, because if this thing sells off for 1 or 2 or 3 weeks, 280 would be the spot you would think this thing has to hold, or it gets really ugly. So right now, very bearish gap down below 420, opens up more downside ahead. Here's Tdoc, and then I see some recommendations coming through. I'll jump on those next. So right here, Tdoc showing some strength here off the key range low. We had a higher high here, and it finally got going to the upside. This thing's holding right now above the 200 level, opens up the 217 target. This is something we've talked about in our trading room since this thing kind of got below the 200, that if it can reclaim 180, there's a shot to go up to 217s. That's the next major target for this one. It appears to be ascending here and has a shot to squeeze. So above 200 opens up 217 to 220 over the next 5 to 7 trading days. Okay, let's take a look here at, we have AAP. AAP is Advanced Auto Parts. This one has been range bound for a while up here. Range bound for a while, holding the 140 level. You know, this pattern right here is kind of reminiscent to me of this kind of pattern here before it kind of fell off. You know, it had a very well-defined support and then started to round off a little bit and then kind of gave it up. This one's kind of the same type of thing. Well-pronounced support level. Just got through taking VPOC offered and now retesting here from below. I don't know if I'm reading too much into it, but again, you know, it reminds me of maybe being somewhere in this zone here where we're coming up right before we try to drop downward. We've seen this thing hold the 140 for a while, and the fact that it's trading right at value here doesn't make it very easy because the edge isn't quite there. But this is very reminiscent here, so I don't know if this thing, if it has trouble here at VPOC, see VPOC, it may offer some weakness here ahead to at least retest the 200, maybe work a bit lower. The move that it's had is really strong off the lows, because this is, you know, it bounced here, then held. Now it's a stop run day up. So, you know, at the very most, I see up to 160 to 162. It's been in the range. But if it starts to lower high somewhere in here, that may be a big sign that we could be headed lower. Midpoint of last month's range is right here. VPOC is right here, which we already took offered. So if it can't get above 154s, then there might be issues. Above 154 still has another 8 to 10 handles above. This here's BA. So Boeing is one we've been watching for a little while here. One of the levels we've talked about is that 140 level. 140 to 150 has been a level we've talked about for a little while. Early on it was 120s, but you know, even recently 140 to 150 here, very important, because ultimately this market, after breaking down through 300, may ultimately be headed back to 300. You have the 280 to 300 level. Your 100% target here is 284 from this key range. We're still holding above the upper end of that key range, although we're still kind of in this range right here. So we're not failing just yet. So for the most part, this has been a really good move. That gap was strong. It was able to reclaim the 200-day average after a very bearish move. It was able to take CVPOC bid, Those are very, very promising. And for the first time, we were like, wow, this looks real. The reason why we liked it down here is because 140 to 150 doubles you to 280 to 300. Because at some point you rewalk it all the way back through those prices. At some point. It might take a year or more sometimes, but it'll get there. So right now, the fact that it's pushed through here very nicely, looks like it's starting to make a move, or at least a try. We have higher value relationship here, so I would say any push back toward 185 to 190 needs to kind of be held in order for this thing to finish strong. Otherwise, we might just kind of be range bound and die, because this thing really has only had a couple spurts before it's gone sideways. With a wide pivot range for this month, we might be sideways and build energy for what could be a continuation. So I like it overall, and I still think it has a good shot for 280 to 300 down the road. Here's Beyond Meat. Oh, no, I typed it into the actual chat. Here it is, Beyond Meat. Beyond Meat is responding to the support level that we've had defined for a while here for us in the room, which is 120. That zone right there has been a very good area to watch for a bullish move, and the big gap down on earnings provided an opportunity for bulls to come in. That led to a bounce. Higher low here. Things are looking up here. I mentioned if it can't hold 120, things start to get ugly, because now we're dropping back to 70 or 80 or perhaps lower. So it really needed to hold 120, and the fact that it did is very positive. We may still drop into the 120s still, but overall I think it has the potential to push higher toward the 170 level. Before, when we talked about this one, if you recall what I mentioned last month, I mentioned, because we were early in the month, I said by it giving up 170, we're likely headed back to 120, because price got above the prior top of the price distribution, and then when it fails, it usually fails and rotates all the way to the bottom of that distribution. So last month I mentioned in our trading room before that, we give up 170 right here, we go down. So last month here, I mentioned if we come up here and test 170 from below, look for a move down to 120. Again, some of these moves happen so fast. That was a 2-day move fueled by earnings, and then it only hit 120 one day and it was gone. So incredible how fast this price distribution movement works at some points, but it did. So giving up 170 gave us 120. Now 120 likely gives us 170, and that's our range. That's our range until it can prove otherwise. So that's the idea right now in the near term. As long as it holds 120, it's headed higher toward 170. Now, we've talked a little bit about the potential for rejections up here at these highs in the markets, because it is the beginning of the month and we're at those extremes. So I do have a couple of sell candidates here to watch out for in the early part of the month of December. You can see right here, Schwab hit 5102 today as a high. We're right back to the point where when it gets above 51s, it rotates down pretty hard. Each of the last couple of times it's hit 51, it's dropped back to 38. So it's been a really fast reversal back down. Boom here, and then boom there. Are we about to see that move again? I would always say first things first, which is we're seeing rejection in the right spot. We're seeing rejection at the previous month's high price. And just for a short-term idea, any pullback into today's midpoint, which is 50.35. So any pullback between 50 and 50.35 could offer a selling opportunity for a pullback into the monthly pivot range. Even if it's a one-day move, that's the first idea. Because this market has been super strong. Look how strong it's been. Boom, boom, bouncing off the 8-period average. Just super, super bullish since it rallied from 36. But now that we've reached an edge, this is composite CVPOC, composite VAL. We just hit composite VAH, and this is the spot to sell. So this is one to consider. We may see a return to value here or reversion to mean. If it really gets ugly, then we may see a return to value and that lower key level at 38. I'm not saying this is going to happen this month, but what we're looking for first is for this normal rotation to happen, and then from there, anything can happen. But a very good market structure edge right now. Very good previous rejections off that zone. We'll see if further rejection develops here for this one. Another one here to consider here is ANTM, Anthem. This is a short-term sell candidate as well. This is a higher price candidate here, and so many times I like to sell a call spread or something of that nature. But there's your market structure. It's basically 240 to 320, maybe a little bit lower, and price got above that zone and failed, and then now it's retesting from below with a hard rejection and a sell signal. This is just like Beyond Meat when it hit the 170. The only difference is that Beyond Meat dropped a little harder first and then retested and dropped. You like to see that happen. This was a drop and quick return, but still, it's fine. So if price can't get back above 320 soon, we might have a quick rotation to 300. Maybe we see a move even farther down within the range, as deep as that 240 level right there. So failed new high and a down move. We had a double top up here, lower high developing here. This could get us lower. One last thing I'll do here with this one is show what the ADR targets are. So we'll bring this back to month. We'll make this here a bearish target. And based on average monthly range, we can project from that high, and you can see based on average monthly range, 274 would be the average downside target this month based on average monthly range over the last 10 months. 288 would be the 75% target. This is your high probability target zone. So ultimately, 320, any pullback as deep as 320 could offer a selling opportunity for a move between 275 and 288. Any close above 320 fails this pattern. It breaks on that idea. So wanted to discuss that one. One last candidate here is GoGo. This one's a little bit more unique, but I like these types of candidates. If we are going to see a short-term rotation in the broader market, then I like to see these candidates that have a great range, that are rejecting the previous month's high. They have a rejection and a sell signal, and you're seeing a higher high failure, and you see lower low failure. So you have a little bit of that expanding range deal going on, and I like to see that happen. So this one likely has a rotation coming back toward $8 with a midpoint stop somewhere around 980. If it can stay below 1150 over the next several days. So again, this is one to consider as a short-term candidate to the downside. Any push through 12 likely opens up a major expansive face to the upside. So this is not one to hold, right? If it fails to close below 1150 and especially 12, this thing's likely lighten it up to the upside. So right now, short-term candidate to return back down a bit, but if it starts to push through 12s, this deal is done. Yeah, great question here by Dwayne. Would you use January options, which are 45 days to expiration, or February, which are 80 days to expiration? I think it depends on the duration of some of these trades. For example, this short-term idea, that would be a 45-day to expiration. It could be a very quick return back down. If we're looking at Anthem, this one right here, for example, has a bit more downside, but again, you're looking at a 1-month move to this zone, so that might be 45 days would be great for that one. Some of these other ones might be a little bit longer. For example, if Apple starts to break out and it starts to make a move to the upper targets, 80 days, may be acceptable. But those would be for longer term there. So for Schwab, the Schwab puts, now this one is one that could be 80 days out because it has a shot to rotate as deep as 38. That might take multiple months. So this is one where it depends on which one you're trading for. If you're just looking for the short-term rotation back, maybe even as deep as 44, 45 days is okay. And if you're looking for more, then I think the 80 days or the February expiration may be better to go with that one. The after hours open come into play right now. A little bit of an early spike and a pullback from those highs. That's going to be interesting to watch heading into tomorrow's market. One thing to watch out for that I continue to watch is the previous high here for the ES. This is last week's high right there. And you can see that we're right on top of it. Right on top of it. And whenever that happens, there's a recipe for disaster because it could fail. Anybody that's long above there gets trapped. The stops come out below the 3650 and you rotate back to 3590 or this low here. So if it can't hold 3650 tomorrow, that might be an indication we're rotating back down. So that's going to be something to watch here for the ES. All right. Well, I do want to remind you all to visit pivotboss.com/bootcamp 2020. That's the link right there. Again, we're doing our 5-day boot camp here next week. We're going to be talking how to use our indicators, signals, scans, setups, and how to get all of that into your system depending on which platforms you use. This is $49.50 for the month of December here, depending on when you join. So if you take advantage of this, it's going to be one of the best bangs for your buck with regards to trading education and training of all of our tools, and it's just going to be powerful information. So again, I'd love for you to join. If you are already a premium member, then you don't have to register for this. This is only if you are not a premium member. So if you are a premium member, current premium members here, it will be free and you do not have to do anything else. So only register using this bottom link here if you are not a member. It says $99 right here, but if you use the coupon code coupon-50, you'll get half off of that $99, which is $49.50. Again, 24-hour chat access, live trading room, and all of the rest there. And again, going to be a fun 5 days next week. Plus, you also have access to the trading room throughout the week where we do multiple sessions throughout the day and have those posted to the room in our video playlist. So again, I want to say thank you all for joining me for the December monthly market outlook. Again, thank you all very much for joining me. Always my pleasure, and I look forward to seeing you in the trading room very soon and at the 5-day live boot camp next week. All right, everyone, have a fantastic rest of your day, and I will see you soon. Take care.